Top of the morning to you traders. Chris Buss here with Traders Profit Compass with your morning look before the bell on Tuesday, April 13th. Okay, it's 6:44 as I'm starting the video. Taking a quick look at markets. Things are flat as a pancake across the board. And that's after coming off a very lackluster session yesterday. Volumes were way down. And at least on the Index and FATMAAN names, not a lot going on. I think the market is kind of waiting for these catalysts to play out. We've got big bank earnings tomorrow. I expect those to be good. I expect their traditional banking to be good. With rising interest rates, I expect their capital markets business to be good with all the trading that's been going on. So I expect the commentary to be good looking forward. We also have the April backdrop as being a very bullish month. 15 of the last 16 Aprils have been positive. One thing that is kind of looming out there is inflation expectations and where rates are going to be heading. Now we're going to be rolling into the period where the comps, the inflation comps are going to be against COVID numbers from a year ago. So there's going to be some dramatic jumps in inflation because last year, we went into deflation mode. So I think the calculus there is, how much inflation, how far do rates run? Is it muted? Is it, off the charts? Is it more or less around expectations? And then what does that do to the market? So I think the market is in kind of a holding pattern here. Now we may get some kind of massive move today, but just as I see it now, it seems like today might be a docile day. Of course, you're always ready for anything to happen, but based on yesterday and based on the fact that we don't have the heavy hitters starting to report till tomorrow, maybe it's going to be a quiet day. But one of the things we also have this afternoon, I believe, is a 30-year bond auction. And those have become more and more important because just gauging the massive supply that's hitting the market, do buyers show up, or do we have one of those disaster auctions when nobody shows up and yields spike and then things go from there? So that's what's going on today. I'm going to go through the SPY, the indexes, and the FATMAAN names relatively quickly because not a lot happened. And then I want to get into some specific names for you. And then I'm going to look at the container and packaging sector. I think there's a couple of nice setups there. So SPY 2 hour, as we said, it was, up 15 cents on a $400 stock is nothing. There was some intraday volatility, but we're still in this uptrend. Nothing much to do. Don't try and get cute and try and short this high. If anything, look for long opportunities. If there is a pullback into 409 or 407, those would be places where I would expect things to hold. Those would be objective long entries. Moving on to the 30-minute chart, you can just see how tight the range was yesterday. We had several tags of that 410.50 area, and I've drawn a little support line in there as the candles have carved out a little support zone there. So that would be an area where, if you were trying to actively trade it and you got to pull in down into that 410 area. That held all day yesterday. And unless something happens, I expect it to hold today. If it doesn't, then your next level is 409. Qs down 44 cents on a $330 something stock. We're sitting here right at the highs at 337. Of course, the same commentary applies from yesterday. On a breakout above 337, that gives a nice opportunity to reset all your strikes and stops and come up with a brand new reference point at an all-time high where there's no natural sellers. We may consolidate here for a while, but if and when we do get that breakout, I would expect that would be an open door for higher. Of course, once you break out, just like we always say, you don't want to come up to 340 and then come back into the range. That would make the breakout look fake. So once we break out, we want to stay out. We can expect a back touch at any time. And if you get that move and it holds, then that's a great second bite at the apple and more or less a confirmation of the breakout. 30-minute chart, you can see it here. 335 was the upper end of this trading range here, and now it's become support for the trading range above between 337 and 335. I wouldn't get too excited really until you saw a move in here to fill this gap. So if it were to come down here, break 335, break 333.74 and fill this gap, then okay, that's a heads up that we're in the midst of a pullback. So you raise the yellow flag at 335, you raise it higher here, and then of course if you're a tactical trader, you can try a tactical short on a break at 335, and then you have a decision point as it comes up to the gap. And if you get a gap entry, then certainly you want to be short for that in this gap range, which looks like about $2 wide. That's something worthwhile taking. If you're a tactical trader, if you're a longer term swing trader, that's not a massive concern at that point. IWM has been really soft, and the chart doesn't look anything like the SPY or the QQQ chart. We're in this consolidation triangle. First candle out of the box yesterday was this big candle from 223 down to 221, a $2 candle. It subsequently found support here at this green support line that I have, and then just kind of oscillated the rest of the day. I don't really think you have a big topside move until 224 is taken out. Here you've got a tighter triangle on the 30-minute chart. You can see that nasty first candle, then some retrace and consolidation. Today, for active traders, if you break below 221, that brings this potential gap into play down here at 219. It's about $1 wide. You could get a gap fill here into 218. But other than that, a lot of overhead resistance. Now you've got the triangle trend line. You've got 223, and then you've got 224. So on the top side, I'm kind of in the mode price has to prove it. It has to prove it can carve through these overhead resistance levels, get that breakout at 224, and then I think that would be a more of a conviction long where you can look for 226 and then 228. Facebook, basically nothing. What I went ahead and did is I've got an alarm set at 305 for a potential back touch. And if if we get that, I would be a motivated buyer here at 305. And certainly, if I got stopped out there and we got a back touch of the 20 down here at 295, I would try it again. Because, I mean, a retrace to the 20 is not that unusual. And I think there's a lot of tailwinds in Facebook. But I think this 305 will hold at this prior high if we do get a pullback into that area. Apple had some interesting action yesterday. Came right up to the top and filled this gap, but then backed off. Came back up to the bottom of the gap at 132 and kind of fell away. I think today your pivot points are 130 and 132. I don't think there's anything to do here at 131 in the middle of the range. I mean, the levels have been working beautifully. And that's one of the reasons why I keep these gaps in place, even though they're filled, because those levels have memory to them. So today, if we were to break back above 132, I'd be a buyer there. If we took out 133, I'd be a buyer there. And if we took out 134, I'd be a buyer there as well. And then look for 137. But if it wants to retrace and loses this 130, I think it's really 130.25, I think you're going to come back here to this 128.50 in this gap. And what I went ahead and did is put on the fib retracements here in red. And you can see that if price were to come back and fill this gap, you'd be right at the 38% retracement level. And that would be a common place to find support and try an objective long. Tesla, I've zoomed out to the daily chart just to show you this price action. We had the multi-day test up here at 880. It fell away hard and has since been consolidating in this flag type pattern. And now price is testing this 700 to 710 range with rising momentum and rising RSI. So although price has not done a whole lot, the underlying technicals say that there's buying pressure there. And if I was, looking to get into a swing position, I would get into it on a break above this 710 area just to be sure, and then shoot against 700. Give yourself, a $10, $12 stop. And notice at that point, price will have recaptured all the moving averages. It actually already has. You can see here price yesterday broke above the 50. But what would happen on a breakout is the 8 EMA will then be on top and the 20 will start to curl up. And that should give some real bullish momentum to the stock and open up a window to go back up and challenge the prior highs. So if you've got an eye on Tesla, I'd be watching 710 really carefully. I believe everything under that is, short-term, active trader, jockeying around, mostly noise. I think 710 is the real area that you want to focus on for more of a duration trade. Microsoft, nothing. Just working up the trend line. I think there's absolutely nothing to do as long as price holds 254. Even short-term traders, I wouldn't really mess with this until, around if you got to pull back into 254, you can try a long if you're not in. If you lost 254, maybe it comes in here to 252, possibly even fills the gap at 250. But if you got to pull in all the way to 250 to fill that gap, I would be a buyer there for sure. I think Microsoft is going higher. Amazon It doesn't look like much here, but there was a lot of intraday travel on Amazon. If you were looking at it on a short time frame chart, like a 5 minute chart, you actually got uh, three of the free 50 clubs. It opened here at like 33.52, went up to 33.96, 94, right in there. Turned back around, came back to 33.50 for a tag, then went right back up to 33.90 before it backed off. So if you were like super active and you were willing to take some shots, there was a lot of movement in Amazon yesterday. As far as a swing trading perspective, absolutely nothing happened. Stay long against 33.50. If you're not in it and you got to pull back into 3300, I'd be a buyer there. Google was soft yesterday, broke this trend line, came back in to test 2230. I think that's your pivot today. If you were to lose 2230, you may come in here to 2200, and I think that would be your objective long if you got that move back in here to that area at 2200, and then that would be an area that I would be a buyer. But that would also be an area where it's got to hold, because below 2200, then you got a lot of air below. So, I mean, the whole setup is bullish. If there is some retracement, look for a long entry. Netflix didn't really do anything. It's been stuck here, reached up into this 557.50 a couple times and was rejected, and still hovering around this 552.50 pivot point. I think that's your go, no go line. As long as it holds 552.50, I think it's a long. If it dips down below, maybe vulnerable to a pullback. Before we get into the individual charts, if you're new to the channel and you like the commentary, if you like having these levels predefined for you so you can focus on your execution and not so much on the technical analysis side, hit the subscribe button and the alarm bell. I think if you stick around and get to the point where you can trust my levels, I'd like to think that they're 98% of the time spot on. And if you can focus on your execution, I think you'll become a better trader. And if you jump over into the show notes, you can register for all my content, and you'll get lots of intraday ideas, aftermarket commentary, etc., sent right to your email box in a nice, neat package. You won't miss a thing. Longtime listeners, I really appreciate you being here and sticking with me. Do me a favor and pass the link along to people in your trading circle so we can expand the channel. Hit the like button. It means a lot to me to know that the content is content you deem worth viewing, and it lets other people know that as well. So I really appreciate that for all the support, and we'll keep it going. Okay, individual names. Let's hit a few. XBI, powerful pattern, gigantic head and shoulders. We had a violation of the neckline back here. I had taken a short and got stopped out. I re-entered a short here on the break of the 200. You can see that the technical measured move is down here to 105. You never know if you're going to get that. It's not guaranteed. It's just a projection. But notice that there's, quite a bit of air down here during this run up. So there's not a lot of support. And if you got, another significant down day and got into the lower 120s, you're already below the 200 and you've got all the moving averages pointed down. Very weak RSI, very weak momentum. I mean, the chart says lower, but as we've seen, they can reverse it at any time. But I'm short here. I went out in time. I think I'm in May 125s. So not playing around with real short dated stuff. This is more of a duration call. If price goes back up again above the neckline, then stopped out and another frustrating trade, right? You get the breakdown, you get the second breakdown, and then it comes back up again. But I'll tell you, this is a common technical thing where you get a fake breakdown first, and then the second one is the one that sticks. So I'm hoping that plays out. Talked about Best Buy, big $20 consolidation range, trying to break out here. I'd love to take a long here. I just want to see a little bit more. But as long as price is up in this 122.5, 120 breakout zone, I think this looks good with a projected move up to 140. Nvidia, I wanted to bring this to your attention. I think there was some news yesterday about their upcoming earnings, blah, blah, blah. Don't quote me that they're going to blow it out of the park and all this kind of stuff. But it produced a big candle up 32 bucks up here to the top of the prior high. And what I want to point out on Nvidia is this big $120 trading range from 460 to 580. And what this reminds me of is all the FATMAAN names, right? Facebook, 6-month consolidation, Apple, Microsoft, Amazon, Google, all those names did nothing since last September, grinding away within a range. And just recently we got the breakout. And I think these are the moments you got to be ready for, because easier trading follows harder trading. When you're grinding around on a stock like Nvidia right here in the middle of this range, $20 to $40 on a $500 stock, that can grind you to pieces. But if you can catch the breakout and get this measured move of $120, $140, and this thing catches fire, that's when you can get some easier trading where you get this next move higher, and then you go into a long consolidation phase where it rests. So trading back here, if you were in it, was easy and very profitable. Here, not as much. Could you have made money? Yeah, if you're a sharp range trader, you can make money. But it's a lot easier to just get long on a breakout above 620 to new highs. Just anchor yourself there and wait. Not try to trade, the 5-minute chart. It's kind of like, that Best Buy one we just looked at. Once you get that breakout above 620, that's where you anchor a position and you say, you know what? It either holds this breakout or it doesn't. And as long as it holds that breakout, I'm going to stay long and see what happens. And so I want you to put that on your radar screen. And I know that would be, an expensive contract. Get 1 or 2. You don't got to get 10. You don't got to get 5. Give it some time. Let it grind away. What you could do also is look up, see when earnings is, and get yourself a contract that expires the week of earnings, but be out. Don't hold it through earnings, and maybe you get a $50, $80, $100 run before earnings even happens. Then you get out, step aside, reset after earnings, because if everything's priced in going into earnings and there's a hiccup, you lose all your money. So anyways, this might be a great candidate for a pre-earnings run of 4 to 6 weeks, depending on where it is. DraftKings, going the other way. The reason I have this chart up, I know it's a popular ticker. I'm not in it now, but I know a lot of people are interested in it, are trading it. But from a technical standpoint, the yellow flags are going up. We had a nice uptrend line up here at the top of the channel, came down, broke the channel, back tested the channel, came back up, and I know it's hard to see it, but you've got a convergence of all the faster moving averages. You've got the 8-day, the 20-day, and the 50-day in there. And as a cluster, it rejected price, and price was off almost 7% yesterday and is now down at this 157.50 area. If you're a bull, you got to have it hold here. You got to have it hold here, because anything below, I think it's going to come down here and find the 200. I don't know what's going on with the stock. I don't know, anything fundamentally, other than always what I hear is, growth, growth, growth. But obviously, technically, it's telling you a different picture, that things have cooled off, and you've got to hold this line. You've got to hold 57.50. I'm not saying you got to go bananas short if this fails, but I am telling you that below 57.50, I see price coming in to test the 200. So be careful if you've been camped out long in DraftKings. Now, quickly, I want to go through the container and packaging index. This is a chart of the index itself. You can see, steady rise into this wedge formation, and now breaking out to highs. I've got a few charts within the group that I want to point out. Here's ball container, run up, consolidation, emerging breakout. I see this going back to 98 here as the economy reopens. I mean, all these products, everything goes in a cardboard box. Think about it. Everything. And all these guys are into making containers and cardboard boxes. I think they're going to have pricing power. I think, over the next 2 quarters, we're going to see, the golden age of boxes and containers as things open up and things start shipping at a furious rate. Probably a day late here, but you get any kind of weakness into 88, I think that's a buy, and then you can, set your stop below. Notice all the moving averages curling higher. Those are going to be support going forward. International paper, I like this setup. Threatening to break out above 56. I think you set your alarm there. You check when earnings are. You can either play it from a short-term perspective into earnings, or you go out in time, end of the summer kind of thing, and let this break out, and then you shoot against 56 the rest of the way and see if you don't get a leg higher in international paper. Owens, Illinois, beautiful bull flag. Came up off a 12 impulsively, consolidated between 14 and 1525. I've got the measured move here out to 17 plus. If you get a pullback into 14, buy it. If you get a breakout above 1525, I'd be a buyer there also. I think all these guys are going to grind higher. They're not going to be Nvidia, putting on 5 and 8% a day when it gets running, but you don't have to. The options are priced accordingly. So think about it. If you get a move from 15 to 17, that's over 20%. So, that works. So nice bull flag on Owens, Illinois. Packaging Corp, not quite as exciting, but I would still definitely put yourself in some alarms. I would alarm 145, 146. If this were to pop this little intermediate resistance area here at 140, I think you're going to get a move to 146 and then eventually break out. If you wanted to be more aggressive with it and say, you know what, I want to buy this breakout above 140 and simply play for a $3 move up to resistance, I mean, you can do that. Maybe that would be a play into earnings. But this isn't the most exciting setup of the bunch, but it does show you what's going on and give you a level to alarm at 145, 146. Here's WestRock. Here's a name that we traded before. We were back in here and more or less got frustrated with it and quit on it. That was a mistake because what it did was it pulled back and then broke out again, and that was the move. But you could certainly look at this as a bull flag, this impulsive move here, a consolidation below resistance, and now an emerging breakout. So, I think the way I've drawn it, it broke out yesterday. So if there's any kind of positive movement today, I think that would validate the breakout. And then I think you can stay long, like against 53 or 53.50 or 54, whatever your risk tolerance is. But I think WestRock's going higher. It's a bullish chart. It's an objective pattern. Right where that breakout has to hold. All the EMAs are bullishly stacked. 8 above 20, which is above 50, which is above 200. You've got a rising RSI, and you got PPO poised to put in a high-level bull cross and then reaccelerate higher. Don't forget, on all these guys, check your earnings calendar and don't get caught holding the bag on earnings that you forgot about. Make a note on the chart and decide if your strategy is to play for a run up into earnings or a longer term perspective that earnings will be improving as the golden age of boxes unfolds over the next 6 to 9 months. So I think that's going to be a theme going forward. Real world economy stuff as the economy unfolds, and there's a bum rush for all things that are real in the economy. Commodities, containers, shipping, airlines, cruises. I think you're going to see a surge in those types of names. Okay, let's wrap it up here. A little bit longer than usual, but I wanted to cover off the container section. Look forward to more individual chart work where I can give you some real objective ideas and accompany that with the indexes and FATMAAN names if you're an active trader. So Have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.